AMC stock came to play today, baby. First day of the trading week. AMC stock is currently up 8.25%. This is happening exactly as we orchestrated it would. So congratulations to everybody that watches these videos. And on a technical basis, we are in a much better place now than where we were even on Friday. So I think that is very exciting. As always, we are going to go over all of the data that you guys need to know, specifically on AMC stock. But I also want to talk about the news that came out today about the home buyer sentiment is not good at all. So we have a lot to talk about. We also have earnings coming, and that will be key. So without any further ado, I hope this video is not a long one. We'll try to keep it short, sweet, straight to the point. Hit that like button and subscribe to the channel. Comment down below, what do you guys think about AMC stock? Where do we head from here after an 8% move that we're currently seeing? This opens up the ballpark to see some even bigger moves. So let me know your thoughts on that down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description. We had a lot of beautiful trades last week. I think it was over $1,000 net profit. If you guys want to come join that, if you guys want to be a part of it, we're going to go for another good week this week as we do have some earnings trades and we are setting up for that one. Link down below in the description. Now, getting straight into this video, AMC stock pretty volatile here in between 8 and 8.5% positive. We are moving around quite substantially as you get into higher prices. The difference from, $10 to 16, a 5%, 10% move starts to actually move the stock up or down in a much more dramatic way. 8% a couple of weeks ago would have been like 25, 35, 45 cents. Now it's a $1.27 move to the upside. So there is a positive thing right there. But if you look at this on a technical basis, where we were at on Friday and really last week, this played out exactly like March did. And that's why I called out March so specifically. Why? Because you were finding resistance around $15 per share, really 1, 2, 3 days. And you previously did back here. This was on June 27th. And then you finally break out above that, and you actually broke out above the first major moving average, which was the 50-day moving average. And then what happened? Well, you got rejected that same day. You did not close above the 50-day moving average right here. 1, 2, 3, 4 days. But you also held support at the previous resistance, which was $15 per share. And at this point, heading into this week, you were either going to see a big move up or a big move down. And for a lot of reasons that we talked about in the video yesterday, we thought it was going to be a move to the upside, and it does look to be confirmed as that. So how does this change the narrative going ahead? Well, if AMC were to see some downside, if the markets were to see downside, well, just like what happened back here, you're probably going to hold support at the previous resistance level, which would be the 50-day moving average, which is currently at $15.59 per share. So it means that your downside can be more limited and your upside potential can start to open up a little bit more, because where we currently sit right now, we don't have any resistance levels until about $20 per share. And that is a psychological resistance level, much the same way as, a stock like Tesla or the S&P 500. Let's say Tesla is chugging in the 950 range and then it goes to 1,000. Well, some people have their orders put in at 1,000. Maybe they have sell orders, right? It's a psychological level. If it can break out above a psychological level, it can go even higher. And that's kind of what happened around the $15 level. The next psychological resistance level will be 20, but the next moving average is the 200-day moving average, and that is at $22.54 per share. So it gives us a lot higher of a range potentially for the upside, and it means our support will be, like I said, at the 50-day moving average, the prior level of resistance. So that is how this narrative has changed, really, because of today. Now, it's all going to depend upon what happens with earnings. So don't be confused if stocks just come out and are missing earnings. If earnings season is terrible, well, that is not going to be good. By and large, Bank of America, Goldman Sachs had decent earnings. What Goldman Sachs actually said was not so good. Goldman CEO David Solomon says inflation is, quote, deeply entrenched in the global economy. That is not a good thing to hear from the CEO of Goldman Sachs. But he says, quote, "I expect there's going to be more volatility and there's going to be more uncertainty. And in light of the current environment, we will manage all of our resources cautiously," Solomon said. And that is a good thing, right? The last thing you want to see right now is your bank CEO saying, yeah, everything is great. We're bullish. We're buying everything. We're levering up. The last thing you want to hear. So that's a bit of a mixed bag. Some things they had to say were bad. Some things that they said and what they are actually doing as far as, what the numbers look like were definitely good. So it wasn't a really, wow, that's really, really good kind of earnings, or wow, that is terrible. It was kind of in the middle. And right now, given what has happened with a lot of the prices of stocks, they're kind of expecting, or at least it looks like a lot of stocks are pricing in already bad earnings, even though the earnings estimates have not really come down across the broad S&P 500. Now for tomorrow, pre-open and even in after hours, you have IBM. That's going to be an important one that will move the markets. It will dictate, are we going to be positive or negative tomorrow? IBM earnings are good. Well, that's going to give the markets a big boost because IBM at one point used to be the largest company in the world. Can you guys believe that? So it's going to be a big deal. Obviously, they're not even close to the largest company now, but still, for reference, it will be a big deal. Tuesday in pre-market. So tomorrow you have Johnson & Johnson, Ally Bank, Hasbro. Nothing too crazy, but different sectors here. You have Lockheed Martin as well. So you're going to get a couple different sectors tomorrow. But really, Tuesday after hours tomorrow, Netflix. That's going to be the main one that people pay attention to because obviously if you know anything about Netflix or what has happened in really the last two earnings sessions, well, it has been very, very bad. And why I just mean, I guess the best way to put it, stocks are priced for bad earnings is because, look at it. Netflix went from $700 at the high back here in November of 2021, now down to $198.20 per share. Could it go lower? Sure, but the valuations are much, much different now after Netflix has dropped 25% the last two earnings. So it doesn't take a great report to prop up these stocks. Now, Wednesday, you have Tesla. That is going to be the main one, but really all throughout Tuesday, Wednesday, Thursday, Friday, you have a lot of different sectors of the economy that are reporting, and that will be important to see. How is metals doing with Alcoa or Abbott and Johnson & Johnson? How are pharmaceuticals doing? American Airlines, right? Travel, how is that doing? Snapchat, advertising. Tesla is consumer, the automaker. Netflix, streaming. You got a lot of different sectors, so be mindful of that. But yes, Wednesday after hours, you have Tesla. That is going to be probably the biggest one. Tesla, Netflix, probably going to be the two most important ones. I personally do own a lot of Snapchat as well, and Snapchat does report on Thursday, so I think that one's a key. And just for anybody that is watching this video until this point, well, thank you guys for doing that. But I will give you guys the trade I put on Snapchat. Not a recommendation. Trade it if you guys want to. Trade it if you want to lose money. You'll probably lose your money, but I did go ahead and buy an August 19th $20 Snapchat call for about 30 cents a piece, 32 cents a piece, and I bought 10 of those. So $300 trade, basically betting Snapchat could go up about 25% on their earnings. And why I did that is because my sister bought the Snapchat subscription and all of her friends did. So if that happened with just my sister and her friend group, potentially what is going to happen, across the world, I think it could be good. I think it's something that Wall Street maybe is not considering. Could be a big deal. Snapchat also today just announced that they started their web version of Snapchat to compete more along the lines with like a messenger or just a messaging app. So I think that is really good. I think that's exciting, but that's all we have for earnings for this week. Let's switch to what happened today with the economic data. And really, we don't have a lot of data for this week. The main headlines are going to be around earnings, but you do have some real estate data. Home builder sentiment plunges in July as buyers pull back. Builder sentiment dropped 12 points to 55 according to a monthly survey from the National Association of Home Builders. That makes the largest single month drop in the survey's 37-year history, with the exception of April of 2020. Sentiment about current sales conditions saw the largest drop while buyer traffic fell firmly into negative territory. So potentially a decent time to start throwing some offers out there. It doesn't look like a lot of people are getting a lot of offers from this. And why that's so important, why I point it out, is because real estate is the most important sector of the economy. Believe it or not, I mean, that's what caused the 2008 financial crisis, but everyone needs a house. Right. So it can give you a lot of signs, that if real estate is not doing good, well, you're probably not going to see good GDP numbers. You're probably not going to see just good things in general in the economy. Now, let's go ahead and look at the federal funds rate probability. These are known as Fed futures. You can actually trade these if you guys wanted to. I'm not going to get into how to do that because it can get quite risky, but it does look like 31.5% of market investors that are trading fund futures are betting that the Fed will raise rates by 1%. That is actually up from 29.1% as of the last trading day, which was Friday. So not up by a lot, only up by about 2%, but still something worth noting here to you guys. And then you're also seeing obviously the probability of a 75 basis point rate hike going down the same amount, about 1.5 to 2%. So that in theory should not be a good thing, but we'll see what happens by July 27th. And if the 1% rate hike is priced in with over 60% probability, that is what the Fed is going to do, and that will hurt the stock market. That will definitely not be a good thing. Maybe if they come out and the Fed indicates that they're going to stop raising rates after this 1% rate hike, well, that could be a very bullish thing. So it really depends what the Fed says coming. And that's actually a picture of some of the merch we're going to have coming. So stay tuned for that one, because we got some pretty cool designs that are in the work. But nonetheless, we're going to talk about the Fed meeting over the next, couple of days, call it like the next week, because we only have 1 week, 2 days, 1 hour, 54 minutes away. And I think that could be potentially where the market's bottom if the Fed does give us some indication of a reversal of policy, or it could spark more downside. So I think that will be very important. Like I said, though, there's really no economic data. Tomorrow you actually do get a Fed speaker, which will be very important. You get Fed Brainerd, and depending on what she says, that could solidify a 1% rate hike. The Fed knows this, so the Fed is going to send her out either in hopes of solidifying a 1% rate hike or getting that off the table. That will literally show you, based off of what she says tomorrow, Fed Brainerd, if we're going to get a 1% rate hike or not. She is the deciding factor for the Fed. You will get a glimpse into what the Fed is thinking, why the Fed will or will not want to raise rates by 1%. You also have housing starts for June and building permits for June as well. Now let's go over the Ortex data for AMC stock. The cost to borrow max is 11.08%, cost to borrow average of 10.74%, and cost to borrow minimum of 9.97%. So what you're seeing actually happening here is the cost to borrow max is not spiking in the way that I do think it will. Not yet, but you are seeing the cost to borrow minimum and the cost to borrow average that are coming closer to that cost to borrow level. So that would imply, at least to me, cost to borrow max probably will go up. Remember that weird move we seen the cost to borrow max on Thursday where it did go to 186%. Maybe that was a glitch. Maybe it wasn't, but I do expect to see a big move up with the cost to borrow max by the end of the day today. So don't be surprised. The video that comes out at 4 o'clock, the cost to borrow max is 30, 40, 50%. Would not surprise me, should not surprise you. The short interest, the dollar amount is $1.42 billion. Estimated short interest of free float 17.93%, free float out on loan 25.3%, shares out on loan 130.41 million, days to cover of 3.19, cost to borrow of 10.99%, 100% share utilization. At the current time of recording this video, you have about 550,000 shares that are available to be lent out with a cost to borrow rate of about 8.07%. Keep in mind, 8%, 9%, 10%, 11%, these are all very high numbers. To pay out to short AMC stock, like, you have to see a really decent move to actually be profitable, right? Like, even if AMC lost 8.5% tomorrow, you would still be negative on that that trade if you shorted the stock, because of that cost to borrow rate just is so high. It really doesn't make sense to short AMC stock. So we'll see how long people continue to short the stock. Now, you are also seeing a lot of call activity coming through for the day. 26 orders totaling $1.7 million, positive order value of 45%. You're seeing a lot of individual call options coming through, as you guys can see right here, but they're very small dollar amounts. A lot of different firms, it looks like, are putting in, $25,000, $30,000 orders, but then you get some big orders like a December 16th $12 put for $500,000. That is actually, believe it or not, helping to keep us quite subdued. I think without some of these large put orders that we actually could have rallied a lot higher. Maybe we do by the end of the day. I don't think it has to control a rally necessarily, but it's not helping. You're also seeing a January 20th $15 put for about $225,000. So if we start to see more call options coming through, that will indeed be a bullish thing. So we'll see what happens. AMC making a little bit of a bigger move right now. As far as the yield curve is still inverted 18 basis points. This is something that will be asked by reporters coming on that next Fed meeting, and based off of what the Fed says, based off that next Fed meeting and earnings, that is what is going to dictate probably trading for the rest of 2022. If the Fed gives us any indication, no matter what they do, I don't care if they raise rates by 2 or 3%, if in one meeting, that would be wild. So maybe not that aggressive, but even if they raise rates 1% at the next Fed meeting, if they indicate or just outright say that they're going to stop raising rates, well, that is going to be a bullish thing. That is what the markets care about, because the market discounts future expectations. So there you have all that. That is pretty much it. We'll go ahead and pull up the Stonko tracker data just because, see if we can get a glimpse at the option chain. It's not going to be anything too crazy. See, about 40,000 calls are currently in the money, 53,000 calls are currently out of the money, and about 2,000 puts that are in the money. So depending on what happens with option activity, that could help us move to the upside, but we're probably not going to see anything along the lines of what we've seen for last week. 500,000 calls did eventually expire out of the money. But keep that in mind, what I said in the beginning, that this puts us in a whole new zone and a whole new trajectory, just like what we seen back here in March. That's why we were comparing this so heavily, because of the similarities that happened, back in March and what is happening now. You can also see about 29 million shares that have traded hands. We are almost halfway through the trading day. So, give or take, probably going to be a lower volume day, which is a good thing. Once you can get more volume, let's say over 100 million shares trade hands, that's where you could really see, the 20, 30, 40, 50% moves in a single day. So there's that. The RSI is 66.60, so you're getting close to that $70 level, the overbought level, but still we're not quite there. And the MACD is bullish, but still not too bullish, meaning we probably have more upside to go before these technical factors start to work against us. Thank you guys for watching. Hit that like button and subscribe to the channel if you guys have not already. If you guys want to come trade with me live in real time, link down below in the description of this video. You guys enjoy the rest of your day. I hope you're excited, but I will see you in the next one.